So thank you everyone for taking the time to join us today. My name's Emma Hall. I'm Key Relationships Director at Moving Legal. I'll be hosting it today with Roger Morris, who's Group Distribution Director at Kent Reliance. We are joined today, and she's very kindly given her some of our time, her time, Kate Faulkner. Kate is Property Analyst at Property Checklists. Now, we're changing a little bit out of our normal format today. So Kate has very kindly put together a 10-minute presentation on the property market, how it's been, how it is at the moment, and what we're looking at it towards the future. And then what we'll do, we will open up to questions. We have had some questions submitted already, which I've got. You are welcome as we go through. You can see the chat facility. Any questions you've got, please submit them. We'll do our best to answer them. Any we don't get to answer, we will come to you afterwards. So we will answer any questions that we don't get to today. We have Roger up until 5 to 2. So if anyone wants to stay and's got a couple more questions, Roger will depart from the webinar, and then me and Kate will be happy to stay for a little bit longer should you have any more questions you want to ask. So I've made Kate host, so I will hand over to Kate now for the presentation.
Okie dokie. Let's hope I click the right button and you don't get more pictures of the dogs. So let's put that on. Slideshow. Okay, can you see that? Yeah, is that okay? Marvelous. So I could sort of spend a long time going through what kind of happened last year, but completely unexpectedly, we had house prices went up by about 4 to 8% when they're expected to fall by at least 7.5%, and rents actually also did surprisingly well, and they don't tend to rise that much, so hover around the sort of 2% up or 2% down mark, and they were increasing by about 2 or 3%. So the big thing I thought I'd talk about today is complete shock, really, that the market reacted so well, if you like, to such an uncertain time. So the question I've asked is has the market changed forever, or is this just a blip? So to kind of know that, you've got to look at the three things that I think are quite important to sort of have in my head whenever we're doing any market analysis. And the first one is that long term, we normally do around 1.2 million. We sell about 1.2 million properties. And that's useful to us because actually, much as house prices are interesting, the transactions are really what drives everybody's business at the end of the day. And this is a pretty good long-term average. You can see that sometimes we don't make it and then we overshoot, then it comes back down again and then we overshoot. And that's the difference. You know, when you see those dates, you'll see that those are sort of booms and busts, which typically go in line with the economy. We also know that house price growth has been extraordinarily consistent. And I'll explain a little bit more about why I start with 2005 on the next slide. But if you take the average price today, even after these big rises that you see in the first column there, if you take the average house price today, take that away from the average price in the regions that we've got here in 2005, what you will see is that actually since 2005, despite all this rubbish that we hear about house prices had this massive inflation, these massive increases, it actually hasn't. Since that date, pretty much house prices have either slightly exceeded inflation, which is around 3% a year, or hasn't even risen that much. And what I also look at doing is taking what does the market look like if I took the average house price now and took it back to the last height of the market before the crash, which was 2007. And you can see there that actually since 2007, because you haven't got those couple of years of growth beforehand, and then we had the crash sort of 2009 to 13, you can see that the market hasn't even really, apart from London, prices haven't kept in line even with inflation. So anybody owning a property and owning it with cash, which is a lot of people, over 50% now, haven't really seen their property prices go up in line with inflation. And one of the interesting things is you suddenly take that back to 2000, and then you're more into the realms that we've seen over the last 12 months of around 6% increase every single year. So you can see we had this big increase between 2000 and 2005, but since then, actual house price inflation has been pretty much in line with inflation, which tends to be slightly higher maybe over the last few years than wages, but it's not until we had this pandemic and suddenly we see figures that we haven't seen probably back till sort of 2013-14, when the house market was recovering from that from a recession, which drove house prices down by around 20%. So I've chucked a lot of figures out there very quickly, so do quiz me on those if you want. But can't argue the last 12 months has been a pretty incredible recovery and performance of the property market. And this is particularly because uncertainty in the property market just stops it in its tracks. Somebody comes out with a headline at the weekend that says we're all doomed and the economy is going to pop, you wouldn't get any viewings the next week. You just wouldn't happen. Everybody would hold off. Whereas what we've got here is this huge uncertainty that's happened. But because that was coupled with the lockdown and the pandemic, we've seen the market absolutely thrive. And it's really this that you kind of question whether there's going to perform any changes in the long term. And I think, let's be really honest, on the transaction side, these are the forecasts, and I think these are pretty good. You've got Savills, Hamptons, JLL. You've also got Hometrack, who've done theirs, which is pretty similar. And we didn't do too badly last year. We did about one, and I think it was about 1,050,000 properties, maybe a little bit more. So considering the average long term is 1.2 million, that was incredible, particularly because in 2020, Savills, when the pandemic hit, were looking at 775,000 moves. So that recovery is astonishing. We're ranging on the forecast between 1 million and 1.2. I think probably about 1.1 will be about right this year. I think we'd struggle to get to around 1.2 just because we've had so much buying brought forward, if you like, partly due to the pandemic and partly due to stamp duty. So it's good news on the transaction front, but I don't think we're going to see any particular long-term change. And part of that is because we know we're going to we know the economy is not going to be great, if you like, in the next 6 months. And that's a weird thing to say because some of it will fly and some of it won't. And we don't quite know what's going to happen with employment. If we can keep it at 5%, then it probably won't affect the housing market that much more. But if it goes to some of the higher forecasts, such as around 10% that some doomsters are saying, then that may impact a little bit more. But I'm not so sure. I think a lot of the unemployment is coming from people who are in hospitality and catering, and a lot of them are young, and a lot of them don't own homes. So some of the drivers I think that we have are changing. So looking around 1.1 million, and what we do have to remember is there is a huge number of people last year that, bless them, had worked really hard for their 5% deposit to save that. Came out of the house, came out in May and thought, woohoo, we can go out and all house prices are going to fall, only to find out that the door was sort of slammed in their face, and they're still struggling to get those unless you go through Help to Buy or a shared ownership scheme. And sadly, and I do think this will affect this year, last year I think we had a lot of aspirational purchases and reasons to buy, and this year I think the sort of hard reality of what the pandemic has done, clearly a lot more people have died. You've got divorce going up, and indeed debt will really start to hit, I think, in some areas over the last few months. But with all of that happening, with some of the drivers there, the good news is that I think the long-term transactions will probably be the same, but I don't see them being any higher. So the other question is, will property prices rise? So looking at the forecasts for this year, you've got Savills. If we concentrate on the 2021 columns, that's an amazing forecast, zero. Just every single area is not going to increase by anything. Hampton's a little bit more imaginative, a few falls and a few rises, and James Lang LaSalle suggesting maybe a little bit more of a negative market. If I'm honest, although the forecast from Savills isn't particularly exciting, I think it's probably about right. And the reason for that is it would be astonishing to see house prices rise again this year off the back of 8-9% increases that we saw last year. So I do think that's about right. I can't see why a rationale as to what would move house prices forward this year. And I think we're probably going to sit, and the fact actually that house prices aren't falling, this is still, even if we get no growth this year, that's still an astonishing result based on the fact the economy fell by 10% last year, and whether we'll recover from that this year. So I mentioned to you all that there's a reason I only take house price growth from 2005. And that's really shown on this slide. Between 2000 and 2005, there were massive house price increases. Every single house went up in value pretty much during this time by about 100%. Very quickly, that's because somebody said, I know, let's go for affordability, not 3.5 times income. Let's introduce lots of buy-to-let mortgages. And although the landlords are kind of seen as these evil beings that pushed up house price growth, for me, the evil beings are Bank of Mum and Dad, who are inheriting money left, right, and centre for the first time ever because they were inheriting property from parents and poured money into the market. They're our 9th biggest lender. They're the ones that drove all of this growth. And as you can see, when you take the next 5-year slots, that kind of growth hasn't happened since. And when you add on the forecasts that the guys have got up until 2025, actually what you're looking at is the market performing in some areas a little bit better than the last 5 years, and in some areas a little bit worse, but not bad. And I think what we're going to see really is those going back to those longer term averages that we've seen since 2005, i.e. House prices will keep much more in line with wages and inflation. The one thing I would say, which is really important, is that we do have some structural changes in the market. And I think this puts a bit of a floor on how much house prices can fall. So we've got an aging population, more people outright owners. Over 50% of people now are not affected if house prices fall because they don't have a mortgage. People aren't trading up as much. So getting the biggest house, which for my parents' generation was really important, it's not as important for the next generation. They prefer to trade down, pay off the mortgage as soon as they possibly can, and live their life. We're 3rd generation homeowners, so everybody's still inheriting property. So as property prices go up, those properties are inherited. People can then afford to pay more for their properties. And of course, people are on repayment mortgages. So there's not the risk of repossession as much as there has been in the past because people are paying their mortgage off from day one. And I think these structural changes are starting to come out and part of the reason why we didn't see the falls that perhaps were predicted. And the other thing is, I think, and I hope this lasts, that people try and play the market quite a bit, I think. And I think last year everybody realised, having tried to play Brexit, play other things, that you just no point in doing it. That roof over your head that you love to come home to is too important. So for me, when we look at prices moving forward, I don't think you're going to see the big highs that we've seen over the last 12 months or in the past, but I also don't think you're going to see the lows as much either. I will point out this is not my Gordon Brown moment because it is not going to be the end of boom and bust. There will be mini booms and there will be mini busts, but I just don't think the range of sort of 20% increases, 20% falls will be as much. And I kind of think the pandemic has sort of proven that. In reality, our attitude to buying property and putting a roof over our head, whether everybody moves out the cities, which I think is overrated, to be honest, it's going to probably take a couple of years to really see and understand how the pandemic has changed people's lives. And the critical thing, of course, is how many will go back to offices or not. So I think Schroders now, they were the first one back in September, October to say, if you don't want to come back to work, you don't have to. So we need to wait to see a little bit. It's probably going to take at least a year or two for that to happen. One bit of good news to leave you with, our chair of the Home Buying and Selling Group, is that one positive for the future is, as an industry, we're working much better before. So whether it's the legal groups, surveying groups, removal guys, we're all working really closely. We produce the guidance for to give to MHCLG on opening up the market. We work really closely with them, and we haven't had all the issues that teachers or other organisations have had. We did ask for a more flexible furlough scheme. We've published a pledge. We want to try and get everybody aligned, if you like, telling people the same thing. So not one like an agent telling somebody you can move in 6 weeks, the legal company telling me it's 10 weeks, the lender telling them it's going to be 12 weeks. We want to try and get everybody saying the same thing. And one of the things that we'd like to do to move the market forward is to for sellers to instruct a legal company from day one of marketing. So do ask me about that. And of course, buyers ensure they've spoken to a broker. We've requested the stamp duty extension once. We're going to request it again. And we've obviously got some news on that. And we've got some really fantastic, innovative changes all aimed at reducing the number of fall throughs and reducing the time it takes for people to buy and sell, and therefore for everybody, hopefully reducing the stress. So, conclusion, I think this is good news, really. I think the future may be a little bit bumpy, but I can definitely describe it as bright. How was that?
Thank you, Kate. Thank you for that. Right, okay. We had some questions come in. I'm actually going to amalgamate one that we received online. So we had one in from Ben Ramsey that came in, and what Ben was asking was, how do you see the stamp duty? In fact, I'm going to read out exactly what he put. Where do you see the property market in 6 months' time? But we have had a question also come in that we can look at, which ties in, that once the stamp duty holiday expires, where do you see the property market heading in the next 2 to 3 years? Now, I think if we'd have asked Ben's question before the leak about stamp duty night at about 1 o'clock in the morning, that question might have had a different answer from you both. So if I throw that out to you.
Yeah, do you want me to pick this up first? So interestingly, and I have to say Home Tracker are certainly producing some really excellent analysis every month at the moment. Their view was, and I'm really aligned with it, that even without stamp duty, a lot of the moves that have been happening would have happened anyway. I think stamp duty brought forward moves without question. And just as we go back to that average of that 1.2 million, that'll shift us down to 1.1 million for this year. So, and what you'll get is each quarter, you'll get a big uplift this quarter. If they hadn't extended the stamp duty, we would have had a real problem, because I do think there's issues from lenders and also from legal companies to get people over the line. So what we will do, hopefully, if there is that extension, is we'll be able to hold more of those sales together. And have us, or what we asked for when we extended it was, we want two things. We want a smooth market this year, so that we can continue the success that we had last year, rather than have this sort of cliff edge. And so at this stage, I think we would look at a good quarter, a more balanced quarter one and quarter two, rather than shoving everything we can in quarter one and then seeing a lower quarter two. And as long as 95% lending comes back, which perhaps Roger can help us with, then I actually think we'll get a good flurry of sort of first time buyer activity in the second 6 months of the year that we missed out on last year. And there's still the other demand, as I say, sadly, is that we're going to see a lot less aspirational moves, potentially not even affected by the stamp duty, changes which are people that are sadly going to have to move for the 3Ds. And I think that extra demand, etc., is what's going to hold that 1.1 million moves in place, when you would really, after the flurry we've seen, expect that to drop a little bit more, I think.
Roger? You're on mute, I think.
Oh, and now he's gone.
He's gone.
Oh, he's back. Hey.
Modern technology at its best.
I am back. I am back. Technology at its best. I think Kate put some really good points there in the presentation, and obviously in the summary to the question, because what I would say is, if you look at the average house price purchase in the UK at the moment, stamp duty is not a massive factor. It only becomes more of a consideration as property prices get close to the 500,000 and above. And if you look from a landlord point of view, with landlords, when I'm buying properties at the moment, I'll buy a property that I perceive to be a bargain, and it's not necessarily driven by the stamp duty itself. It's finding a property with the right price. Because if you work out the saving of the stamp duty, if you're actually having to pay over the asking price for a property and pay over what you believe, you've got to make sure you're making an informed decision on what you're doing. And when it comes to 95% lending, what we're seeing at Precise Mortgages and Kent Reliance intermediaries is people utilising the schemes that are there to give you an assistance with deposits. So if you think Help to Buy, so there's an awful lot of the hardworking families that have maybe picked up some late payments, maybe a CCJ, maybe a default, that the high street banks will not look at for maybe years to come, regardless of the size of the deposit. They can still obtain 95% lending by getting a 75% mortgage and 20% loan from the government with Help to Buy, or possibly 40% in London. But also, if you look at the southeast of England, it's irrelevant if 95% lending comes back. If that couple are buying a property in the southeast of England, that just the income multiplications would need to be way in excess of 5, like 10, which is why we've seen a massive increase in demand for our shared ownership products, which at one point was at 100% of the share. The moment it's dropped back to 95. But it's about looking at what are the solutions. If you take people buying properties in the northeast of England, Stockton, the average purchase price might be 120, 130,000. They're not going to be affected by the stamp duty changes, or the stamp duty holiday. But then you've got the people considering the three Ds would be, if you've been locked. I mean, Emma, you've been locked with Robin in a flat for 12 months. You reevaluate your relationship and you reevaluate what's important. And it's about thinking, do you want to remain there, or would you like a garden? Would you like to move out the city? Are you missing the city life? And I think that's why we've seen people get divorced, people have babies, they've fallen back in love with each other. But it's about reevaluating their life and what they want. Do they want to improve the home? Do they want to change the home? And the deaths, unfortunately, do create an extra flood of properties on the marketplace, which is actually much needed, an increased demand of properties, not death, but you want more people putting the houses on the market. And hopefully this good news now will inspire people to think, right, I'm going to put the house on the market and move forward. So I think there's a lot of opportunity to come, Emma.
Okay, well, while I've got you there, Roger, a question has come in for you. And you touched on yourself being a landlord. The question is, have lenders offered enough support to landlords that have been caught short by the pandemic? And I mean, do you think they have been left short?
I think lenders have, because it is a business, and landlords, when it comes to the when we do a new application, it's very important that you do a business plan. It's very important that you've got cash flow to manage at least 3 months rental lack of payment, at least 3 months. And then we do the portfolio stress test, and it's about making sure you've got enough liquidity and working capital to cover these rental voids. Now, if you properly assess rental assessment of a tenant to make sure right at the beginning, the bank statements, their income, and the likelihood for affordability. And my advice has always been, make sure you get professional engagement. So letting agents, I think, do a really good job of assessment of that tenant. And I think that's very important. But what else can a lender do, in the sense of lenders have given payment holidays, but you actually saw loads of landlords who went for payment holidays who'd had no rental voids, but just thought of getting some free cash. And then that shows maybe some wrong behaviours. But there is the genuine landlords in the centre of London, for example, or the centre of Birmingham. But let's take the centre of London, which I think has been the most affected, where they could always rent the properties. The margin was minute. They were maybe top rate to high rate taxpayers who were affected by the government's previous interest relief, which is still not washed all the way through. It's until next year's tax return, January 2022. And suddenly the profitability was very tiny. Those properties have become empty. They've had to reduce the rent maybe by a third to actually even make a loss, and still not get anybody in straight away, maybe waited 3 or 4 months. And for those individuals, I do feel sorry. But from a lender point of view, there's a lender's got to act responsible, and there's nothing that they can do to kind of bail out those landlords. So there is a few caught, but there's other landlords, and I've found this with my properties, which have got gardens and plenty of living space. My rent ability to get more rent from those properties has gone up dramatically. So there is swings and roundabouts. Some landlords are making much more profit, less tenants moving on. And last year, I think for a lot of landlords was maybe the most profitable year they've had, because of tenants are remaining put, with a few unfortunately being caught by arrears.
I think there is, if I can, Emma, there's the thing that's missing with the government is terribly frustrating, because it was done in Scotland and in Wales, is tenants need the loan system. that was offered, and why on earth they're not doing it. Again, you know, we've asked for this, and we're even the landlords are working with Shelter and all the tenant organizations. Everybody's asking for it, because what you have got now, and again, be interested to hear it from Roger about that 3 months you mentioned, having that rent just in case. So at the moment, my understanding is you've got 6 months till you can evict anyone, and I don't think that's going to go away in the future. Section 21 is going, and I think 6 months going to stay. And I partly think they're testing to see the results now. And then you've got another 6 months to wait for it to go through the courts. We've got landlords out there who haven't been paid penny for 2.5 years. And unless we get the loan scheme in, it's not just to help the landlords, it's mostly to help the tenant, because otherwise they're all going to be evicted at some point, and they're also going to have CCJs against them, and they're going to have a terrible time into the future. And why on earth would a government think that was a good idea to force them down that path? So tenant loans we absolutely need. And interesting to back up Roger's point, I believe that looking at the research that I have, if you've been with a letting agent, you're pretty much most have got their rent. But it's quite interesting. Tenants are being a bit more canny, and perhaps landlords a bit more generous when they're dealing direct. So there's been more deals done on the direct side, whereas the letting agents helped, I think, hold up the rents as well.
I think that's a very good point, Kate. Really, absolutely, because the letting agent gets paid on its management fees, and if it's not getting a rent, then you're going to think, why use them? Where tenants have come to me in a distressed situation and maybe hadn't been able to pay rent for, I've had one which had maybe 4.5 months, not directly due to COVID, to do with just a series of an awful series of events. For her to catch up at an affordable rate, it's going to take her 3 years, but she's been with me 9 years. So would I be able to come up with a plan to work with her and say, look, let's prepay this back over a 4-year period. If you move out, you're going to have to pay it up. But let's not make the problem hard. Let's obviously charge interest. But you know she's a genuine person. What does really get landlords is when they know someone's playing the system and they know it to the penny of what they can and can't do. And I think there's always loads of landlords who've gone out of the way to help the tenants, and there's landlords who are the opposite, who aren't necessarily good landlords. But I think those that have been using letting agents and professionally had that services without that barrier of emotion removed, Kate, I think have done and will do far better in the future.
We've had a question come in now. It's actually quite interesting, actually. Kate, you've mentioned about the tenant loans. What the question is that make sure the tenant pays the landlord. If they're already in trouble to take the loan, surely the money should go straight to the landlord.
I would like, yes, I'd love to do that, because that's one of the major problems with universal credit at the moment, and the way that works. So how the scheme could work, I believe in Scotland, you have 2 schemes. So you can apply for the loan as the landlord, or there is a tenant scheme that you can apply for as the tenant. And then in Wales, it's just a tenant scheme. So there must be a system. It's a good question, actually. There must be a system to make sure that money is being passed on. So, and I don't actually know whether it's being passed direct to the landlord, but I imagine there's got to be some system in place to double check that.
Yeah. Fabulous. Okay, so I mean, one of the questions that did come in, and I think we've covered this, but a different angle, and I think you actually already covered it, the 3Ds. Has the stamp duty really made a difference to the volume of transactions going?
Welcome to the webinar. You have
has it just made the transactions that we're going to go through just go through that bit quicker? How much of an impact do you think stamp duty has really had? And if they'd have not implemented it, would we still have had the year that we were going to have?
So I think we would have done, because I think most of the aspirational moves, you could see it coming, and it was middle of May we opened the market, and then it was about 2 weeks later, I think, that the announcement was made, and a little later in Scotland and Wales. And those first 2 weeks were just unbelievable. I mean, they were record breaking in every single way, from Rightmove and all the other sort of stats guys from a search perspective. So I think that the stamp duty helped and drive some sales, but I think we would probably have got a lot of them anyway. Of course, what we wouldn't have had is the pressure that everybody's under over the next few weeks. And you know, to be fair to the government, they, on the home moving side, I can't really fault what they've done. They've allowed the market to stay open, and I hope that's partly because of good guidance, and also a massive thank you to those that have been going out and carrying on with viewings for doing such a good job. And the removal guys, who everybody forgets, but they were in the toughest situation, and we had to work really hard to make sure that they could move people safely. So I think the industry's done itself a lot of good over the last 12 months and allowed people to move. One of the reasons that I wanted to keep the market open was because of those people that were in the situation of death, divorce and debt. We didn't want to make their lives 100 times worse. So I think if you ask me, has the pandemic caused more of those increase in transactions than stamp duty? It's definitely down to the pandemic, without question. And don't forget, historically, people were holding off because of Brexit, holding off for other reasons, playing the market, expecting these things to happen. I know, because I've been working with them beforehand. So they were all starting to come back in, and then suddenly lockdown happened. And then they just were like, they all came out going, oh, we're going to buy now. I've been holding off for 2 or 3 years. And then you've got all the people shut in homes that they hated going, I can't stay here a moment longer. So it was definitely pandemic push, with a bonus, if you like, of stamp duty. What stamp duty, I think, did was bring the more expensive moves forward 2, 3, 4, 5 years ahead. Yeah. So that's what I believe. Certainly in my conversations with agents, that's what they found was happening.
Yeah. Do you want to add, Roger? I think we got you on mute again.
We're not making this public, are we, Emma?
No.
We do a good edit.
This computer just creates a nightmare. I just think the market itself at the moment, there's just Brexit. When Kate says that, and you just think, God, yeah, Brexit, and don't underestimate how much uncertainty Brexit gave our economy and how divisive it was, and how much it split the country in those that campaigned to reverse that vote and those that campaigned to make sure that that vote went through. And then we kind of saw in January of last year that bounce of Boris coming in without being political, but that kind of new hope and new belief and new start to be taken away by the tragedy of COVID-19. But then the re-evaluation of the way what people matter to each other, you know, those that have lost loved ones who haven't really been able to celebrate. And I know Kate relate to that, and how many others haven't been able to go to those funerals or those weddings that were short services, and the new births that will come along. And I think if it was it's hard to compare to 1918 because of the war, but when we had the last pandemic, the roaring 20s were about liberation and the celebration of life. And I think more than ever, we'll appreciate what it's like to have a coffee or have a pint of beer or meet for a walk in the park, to be able to be at a football match and watch our favourite team win or lose. And I think it's going to see the way that fabric of life changes and the importance of a home. And I think people not playing the system. And there's a need for landlords to provide a more ever increasing social housing for those people in the hospitality industry who've had no income, maybe had some form of financial problem. When the entertainment industry, restaurants come back, lenders are still going to be a year from them being employed before they'll want to offer them a mortgage. Because what happens if COVID comes back in the winter? What happens if lockdown happens again? So there'll be people who'll be forced to have to rent for maybe another 18 months. And they've lost that deposit that Kate correctly mentioned, that they've saved up for this money, and it's been taken away by needing to survive and inflation. And they might be trapped in that area for a while. So there's a lot of challenges to come, but a lot of opportunities. But more than ever, we need to connect with our brokers now. And the brokers' opportunity at the moment is if you're with tenants, those tenants might not be able to aspire to home ownership unless you get into the family and you look at intergenerational finance. So they could have nanas and granddads that will do equity release. There could be bank of mum and dad, but what they all need now is financial services just to rent for protection, critical illness and life cover. And I think don't underestimate that those tenants need protecting, even if they can't get a mortgage. So there's lots of opportunities, and it's about maybe learning new ways of connecting with customers for many different needs than just the obvious mortgage.
And I like the idea, Roger, of connecting with tenants currently. I think they're one of the biggest missed opportunities.
Yeah.
I was doing a webinar for first-time buyers the other week, and there was a brilliant Radio 4 half hour on Moneybox with first-time buyers and a mortgage broker. And what people aren't doing, and this is something that I was presenting at the webinar, is you've got to talk to a broker 3 years before you buy.
Yeah.
That's when you need to talk to them. And interestingly, tenants and people that aren't first-time buyers have no idea that that's okay.
Yeah.
They don't think they're allowed to, and they don't think they would be interested.
Yeah.
And one of the cases was, and this is a real classic, and it'll be interesting to see how this pans out the next couple of years, is a lady had gone freelance in April last year. Can you imagine that, taking that risk, leaving a job, went freelance, was doing really well financially, rang up to see about a mortgage, just lost the opportunity. And if she'd spoken, it's really important to try and court these people, 2 or 3 years in advance to make sure that they set themselves up right, and they get their lifetime ISA and things like that. It's a real missed opportunity. I think you're spot on with that, Roger.
Yeah, Kate, what we do is if you're coming to rent any one of my properties, and we've done this for years, what we're saying is if you rent one of my properties, during the tenancy application, part of our overall assessment is you're asked a question: what would you do, Kate, if you were unable to work because of sickness or unemployment?
Oh, clever.
And if you haven't got an answer, they're referred to the in-house specialist protection specialist, who will then talk to them about life, critical illness. And what we find then is that broker will then educate the tenant for home ownership, and the tenants will stay with me longer, be a model tenant, pay the mortgage or pay the rent, and leave the house in a very good condition. Not all move on, a lot happy to stay, but I've had one tenant pass away in the 30 years that I've had buy-to-lets, who had a life policy because it was part of the vetting process.
Wow.
And the mother, who was left with, I think she had 4 children. I can't tell you how emotional that call was when she rang me. So tenants, 8.5 million.
Yeah.
It's an opportunity to protect,
yes, absolutely,
educate, and prepare them for home ownership.
Yeah. Well, for interesting, one of the things I've said to the government are how to sort, because I'm fairly confident we sort the PRS out really quickly. And one of my ways of doing that is that you do exactly the same as you do with car insurance. You have to have rent protection against sickness, death, all that, everything else as a tenant.
Yeah.
And if they'd introduce that, and the landlord has to have their protection, so that actually housing isn't a problem. Why they do that on cars and don't do it on housing, I don't understand. I just don't understand, because it would be really helpful for people.
Well, we've got a question coming, and actually, interestingly, I think this question actually hits on the conversation that we actually had before we actually went live. I think this is something you both sort of agreed on. So the question is, should stamp duty and council tax be replaced with a proportional property tax, and what impact would that have on rents and yields? So I think that's 2 sorts of questions, but we did discuss about stamp duty as to the tax on selling the property. Should it be moved? So I don't know who wants to pick. I think, Roger, you were quite passionate on that when Kate brought it up.
Oh, good. I'm glad I'm not first.
When we look at sort of capital gains at the moment, it's 28% most landlords would pay, and under the new rules that the revenue brought in, you've got to declare if your property you've disposed of is a second home and pay your taxes within 30 days. There's a lot of people who dispose of properties think the revenue won't know, but now every property is connected because every property has an electronic footprint. So it has a data record, who's ever lived, registered, and connected itself to the property. So the revenue will track down on that. Do they bring capital gains in line with your taxable income? So if you're a top rate taxpayer, you sell a house, you'll pay 45 pence in the pound. Will that come through? That's potentially possible. But then you could be like me, where you're never going to sell a property till you die. And then if it's in a limited company, you've got the transition through shares, and you might never have to sell the properties. So there's lots of points with landlords. They're just not going to sell. So it's not a tax you're going to get. Do they bring a tax on selling residential homes? Well, if they did that and you were an older person, you're just not going to put your house up for sale until you have to. So there will be a reduction in the supply of houses in the marketplace. If you do a combination of capital gains, stamp duty and council tax, where's the landlord's going to put that? They're going to put it on rent. So it's going to affect the people on the lowest income, because landlords are not going to pick that bill up. They're just going to pass that to the tenants as an average. And that's going to cause more misery to the low pay. And whatever they do is going to create a negativity, but they've got to do something. And I just think it's very hard to predict. I don't mind capital gains going up on property, because on buy-to-lets, because I don't sell them. I'll keep them for the rest of my natural life. But there's people who will buy and will sell, and that in itself will create a market. So it's going to be a hard one to say. It's more the interest of what it said, that they were going to increase corporation tax potentially up to 23%. So those that have moved them into a limited company are going to be paying 4% more of the profits into the government. But landlords aren't the focus on that. It's the big companies that they are thinking of.
I think for me, you got just trying to be as sort of balanced as I can, fair to everybody. We have got a £400 billion bill to pay back.
Yeah. And
how on earth I don't think they can do income tax rise. We talked a little bit about VAT. There may be certain products that you could increase VAT on, and which are sort of pure leisure products that would help do that. But I think this is a once in a lifetime opportunity for a government to take away the stamp duty tax. And I agree with you, Roger. I remember when it was announced, I was on Radio Nottingham, where I'm near, and they said, "Oh, is Kate so exciting about the stamp duty?" I went, yes. All those people down south are going to save £15,000. And on our average price in the city of Nottingham, you're saving 500. You can see the kind of colour drain from the interviewer's face as this was the reality that had set in. For whatever reason, I mean, stamp duty is hardly paid out of the southeast and London. So I think they should scrap stamp duty, because it is cash up front, and that's hard. And I think they should introduce a capital gains tax, whether it's 2 or 3% on the amount of money you make. And if we look at who's made money out of the pandemic, well, most people have had, on average, an 8% increase in their house price over the last 12 months. And that was partly, you could say that was partly government funded. So I think that is the only tax that they could introduce that was fair. I'm not 100% sure that would put people off from selling it. Because the reason why we're told at the moment that people won't trade down is because of stamp duty.
Yeah.
Which is like madness, because they've all made a fortune if they've bought before 2005. You saw those figures earlier.
Yeah.
So for me, I think they'd be more likely to trade down, because they don't see the loss of the money. Whereas with stamp duty, you see the physical loss of the money. Whereas with CGT, you just get slightly less in your pocket. So I'm all for a blanket CGT tax on housing, and get rid of stamp duty, and let's change the system. People who earn a lot of money or any money out of a property should pay a little bit back.
Yeah,
we just should. That's a fair way of doing it.
Well, I'm conscious of time, so I'm going to put this to Roger first, because this part is a direct question to you, and this actually has come up quite a few times from people that have registered for today. That what do you think is going to happen to the city centre office market, which we've touched on, and following the pandemic, this office space being converted into actual residential? And to make it specific to you, Roger, would you invest in an office block in Newcastle with the view to convert it into residential?
Right. So two points. I think if you take city centre, whether it be Newcastle or London, I think when it comes to offices and people not going to use offices anymore, they're going to work from home, I think will be a historical memory within 18 months. I think people, I remember I love being in London. I remember meeting your Robin and going down to London and wanting to be out for curries and meals and working during the day and drinks afterwards. We're social animals. If you live and work, if you work in London, it's because you enjoy the buzz. You might moan about the tube and the journey in, the journey out, but you like that whole experience. Now, that's not to say there'll be a bit of flexibility of home working, but I think within a period of time, people will come back to working in city centre locations because of the nightlife and the socialising. And I think also when you look at the buildings in London that have been built for offices, they are not built for under permitted development rights to convert to suitable residential properties. And it's about understanding how that works. So I don't personally wouldn't buy an office block to redevelop into residential because I think it becomes quite hard. And I think actually office space will ultimately be re-needed again. What I don't think is going to be different is Debenhams, House of Fraser, the big department stores will never come back, is my belief. I think those big institutional ways we used to shop has gone. And I think coffee shops, boutique shops and smaller places will be a need. What do you do to repurpose them? But I think there's some challenges to come, but everything is ultimately worked out yet.
Yeah. Kate, what do you think?
So I do think the idea of everybody moving out of cities is over-egged, without a doubt. But I do think that certainly I think you'll probably split more families, perhaps moving out and you go and work for a couple of days a week, which is what I do. I used to work a couple of days a week in London and then live out in the country. And I think that will happen more. So I think there will be some reduction in some office space, but it'll be very individual. My view is if it is possible, that would leave space to convert more city centre places into city centre offices or retail or whatever it would into residential and take the pressure off areas like London, centre of Birmingham, etc. If we could find, my view would be is whether we could or not, I'd like to find a way. Because if we could come out of this pandemic all feeling that we had a better lifestyle and a better work-life balance, and we could add to our housing stock without hurting anybody, as you do at the moment, because I know there's charities being chucked out of office blocks to make way for residential, and there's all sorts of it's a real tug on that space. If it means that our city centres, which I think will always be under pressure space-wise, could provide more housing at better rates potentially, then I'm all for finding innovative ways that we could get that done.
Brilliant. Well, I think we are coming to an end. So unless Roger or Kate, you want to add anything at all? I think we've covered.
No, I just found today's session with Kate absolutely invaluable, and I think the things that I'll take from it is that 1.2 million average transactions a year, and I think the in-depth knowledge that she given to me I found was really invaluable, and I think it gives us that where will that market go next and what will happen with the budget. So I just wanted to thank her for that time, please.
Oh, that's really kind. Thank you. Thank you
very much. Just before we go, I'm going to add one little fun question in before you go, Roger. Robin Hall would like to know, where did you get your tie from?
And I do like that. Thank you for that, Robin. Paul Smith, but other brands are available.
Oh, he's a Nottingham boy, Paul Smith.
He is a lovely
He is
guy.
one of our local entrepreneurs.
There we go. Well, thank you. Any questions that we haven't covered, I will get them past to Roger and Kate, and we will just get a response over that we will publish out to everybody that registered today. And this will be available afterwards for people. So if you've got any of your staff or colleagues that want to have a listen, the video of the session will come out next week. So thank you everyone for joining, and enjoy the rest of your day.
Take care.
Thanks, guys.
Cheers. Bye-bye. Bye.
Bye.